was a strange day on Wall Street as stocks tumbled near the start of trading, dropping down over 800 points, but eventually rebounded before the end of the day. Safe to say that that was just the beginning of a lot of uncertainty right now. So how will the war in Ukraine affect our economy? Joining us to talk about that this morning is Jake Guttman with Rosevest Financial. Jake, good morning. Good to see you.
Morning, Scott. How are you?
Doing well. So this volatility, I'm guessing it's going to continue. What do you think?
I would agree. I think times like this where we're looking at potentially a pre-war, let's call it, window of time. You can call it a prelude, an intro, whatever you want to call it in the story of the war. But this is actually where more volatility takes place. And if you look at U.S. troops entering conflicts or wars, typically that volatility actually decreases and markets become more stable once there's an actual conflict the U.S. is involved in, which is actually rather interesting if you look at the data.
Will there be opportunities that present themselves throughout this?
There always are. I think for the disciplined investor, that's really where things are going to be viable, right? This is something where there's always opportunities for long-term investors. A great adage I hear, and I love this, I just heard this the other day, is that a portfolio is like a bar of soap. The more you touch it, the less you have. So the more you can participate in something, the long term, the markets being that thing, the better off you're going to be long term.
Sometimes these events like what's going on right now with this war, they can be short term in terms of the effect on Wall Street. Do you see it playing out like that?
It really depends. I wish I had a better answer for you in that regard. As we watch these conflicts, this is one that's a little new to us. We've been talking about it for a long time. But if you look at how markets have recovered or performed in other times of war, so let's talk about World War II, for example, 1939 to 1945. The U.S. stock market, which was really the strongest it had been at the time because of the production levels, was up 50%. That's more than 7% a year during one of the worst or greatest wars we've ever had. So in terms of longevity, time's going to tell, especially with energy prices. Russia supplies, in the case of Europe, 1/3 of their natural gas and 1/4 of their crude oil. So that's going to be something we're going to have to feel out as things go on, including the sanctions.
Jake, what about our inflation? It's so high right now, that higher than we've seen in many years. Is this going to take another hit too?
We have this wonderful thing that some people love and some people hate called the Federal Reserve. And we have a really strong U.S. economy right now that we can essentially put the brakes on or step on the gas by playing with interest rates. So while there's a lot of volatility associated with these interest rates rising because of the Federal Reserve, there's also the ability to control how the economy reacts. So our economy is strong right now, but if we find that we're hindered at all with what's going on in Russia and Ukraine, we actually have some flexibility in terms of keeping rates a little lower to keep the economy moving forward at a rapid rate.
All right. Well, Jake, you know your stuff. It's always great talking to you. Thank you. Have a great weekend.
You as well. Thanks, Scott.
Thank you.